Okay, I'm really pleased to have with me today Nick Massey from Proper Insurance. He's the Director of Sales, and we're going to talk about everything insurance on this episode. So I'm super happy to have you here, Nick. I did say that when we were talking before we started recording, and I said I get really excited about insurance, and I think people must think I'm nuts. I've told my story in the introduction, so it's not just being excited about it, it's being motivated to do something about it. So I'm glad to have you here to talk about all these things.
It's a pleasure for you to have us on. I know it's been a long time since Proper's been on the podcast, so we're excited to be back to shed some light. Things have changed a lot over the last decade when it comes to insurance, and if I were to do my own intro into what I want this to translate into, we're going to have a great conversation, but there's so much going on out there with insurance for vacation rentals, from the property manager, what do I need to do, what do my homeowners need to do, there's the OTA coverages, there's supplemental insurance and liability, there's travel insurance. What does this all mean? It's like a big tornado of insurance jargon just spinning around all of us nonstop. And let's break this down, let's put it into categories, so next time after you get done listening to something happens, I want you to think about what category does this fall under. Right? Because none of these things are going to really overlap too much with each other. Some of them will, some of them won't. They kind of work together in certain ways, but literally there's 4 categories of insurance, and I like to call it the 4 pillars, and that's where we need to start categorizing where these things go to structure our risk management plan around our short-term rental operations.
Okay, before we kick off, I want to clear up the terms, because I know that within our conversation we're going to be talking about different types of insurance, and there's all sorts of different terms that are used, and I want to make sure everybody understands what these terms are before we start. So I'm thinking about things like the things that come to my mind. What's a claims adjuster? What does liability mean? What is self-insurance, liability waiver? What are the most important that people need to know before we head off into this conversation?
Yeah, so let's build a little glossary. Because of certain ways I'm going to present some information here, I'm going to categorize some things in a general category. So first thing in the conversation here is retail market for me. Okay, so when I'm talking retail market insurance, I am talking about your State Farms, your Allstates, your Nationwides, all of those big companies that advertise in every major sporting event. They spend hundreds of millions of dollars in advertising, and they don't really do a whole lot in the vacation rental space. So that's retail market. The other terms we're going to talk about in general are going to be property coverage. Property coverage will break down essentially into 3 categories for us. Your protection for the building, the physical asset, the contents or furnishings contained inside that asset, the revenue generated by that property. Those are your kind of 3 general categories of property coverage. And then liability. Okay, so property coverage is physical damage to the structure, and then liability coverage is going to be our somebody slipped and fell, got hurt, sued me type protections. Now, liability breaks into 3 different categories as well. We have what's called, at least in the U.S. markets, we have personal liability, you have premises liability, and you have commercial general liability. These are for the general home terms. Okay. We also want to break down our glossary from basic, broad, and special. So insurance does break down into easy categories that are digestible. Basic form coverage is the cheapest you can buy. It has the fewest amount of protections in terms of perils, which is what's actually causing damage to the structure. Then you have broad form coverage, which is middle of the road, which also categorizes a number of perils that are damaged that will be responded to. And then you have what's called special form all risk, which is a policy that just tells you what's excluded, and if it's not listed as an exclusion, then you have protection for it. That is the best coverage, and for most of this conversation, I'm going to be speaking to special form all risk coverages, because that is the standard that we, for the most part, all have on our homes.
Anything else? If not, we're going to head off into the 4 pillars.
Yeah, those are the basic terms, right? And we'll get into some other stuff around property managers, but for the general consumer, those are things you want to know and understand what they are, especially after this conversation when you're looking at your own stuff.
Okay, so you mentioned 4 pillars. What are they and how do they apply to us?
Yeah, so the 4 pillars for vacation rental owners anywhere or managers, it starts with the manager's insurance package. If you are a professional property manager managing other people's property, you need to have your own insurance, and that comes with a lot of different things. It could be starting with professional liability, which would also known as E&O insurance or errors and omissions, commercial auto, cybersecurity, employee benefits, yada. Pillar number 2 is the homeowner's insurance. The homeowner's insurance is one of the most important parts of this puzzle because every one of these properties that is on the market for short-term rental is owned by somebody, and every single individual address needs to have its own insurance. So it's inherently important for Pillar 2 that all of our listeners and managers are knowing and understanding that everybody's responsible for their own coverage for the property they own. Number 3 is damage waiver products or supplemental insurance, which are becoming increasingly common. They're really meant for the smaller damages. Okay, you can think of air cover as a supplemental coverage. You can think of the likes of companies like Safely, Superhog, Waivo as those are supplemental damage companies. And then the last pillar is travel insurance. Paid for by the guests, last minute cancellations, it's an insurable product. You're not refunding their trip money, they're insuring against last minute cancellations, so you're not dishing out revenue against your cancellation policy.
That's great. Something that's always come to mind, you mentioned the platform coverage. I think we should talk about that first of all, because there are those out there who are saying, I've got the Airbnb host guarantee. And I've always countered with, but you have to have your own insurance. That was when I was working as a property manager, and it was always a conversation that I found a little difficult because I'm not involved in the world of insurance. So I think it's important to get that out of the way, that the host guarantee is not the be-all and end-all. It's not the one thing that you have in place of all others.
It's definitely not, and so many OTAs out there are going to have something similar to the air cover product, if you will. But on Airbnb's website, it comes out and says it's not insurance and you're still responsible for your own policy. So that's why when we're talking about these pillars, air cover and OTA insurance does not fall into pillar number 2 for my home insurance. So they're not the same thing. We need to categorize these into separate realms. It falls under supplemental coverage. It is a backup plan. It is not the fall on, lean on, crutch everything that happens at my vacation rental, they'll take care of me. That is not right, okay? Like I said, these pillars do not overlap with each other, so you still need home insurance, and if you rely on air cover, great. If you fall into the realm of not trusting air cover, then look at a damage waiver product that you can implement into your booking process that's also going to assist with those smaller damage or supplemental liability, perhaps, if that product comes with it, to fill potentially a gap between your home coverage and what needs to happen over here in pillar number 3.
Okay, so let's start with one of these pillars, and I want to start with homeowners, actually. When I was running a property management company, we had an obligation to ensure that our homeowners carried sufficient cover on their policies for their rental activities, because many of them would say, yes, of course, I've got my homeowner's insurance and it covers me for rental.
No offense to other folks in my profession, but there is a line drawn in the sand between rental, midterm rental, and short-term rental. And unfortunately, in the world of insurance, most agents and brokers are not correctly relaying what type of rental it is to an insurance carrier. And unfortunately, many insurance carriers out there, especially in the United States, want nothing to do with short-term rentals, right? So you're now relying on an agent whom you've, in one way or another, told them it's a rental, and they present that information to a carrier, and a carrier sends back a quote. But unfortunately, the underwriting side, they don't really understand what you're doing. So we need to be very clear in what the rental situation is when we're obtaining quotes and going through our insurance package. Now, in the general terms of insurance, rental is going to be a 12-month lease, standard long-term rental. And there's what's called dwelling landlord policies all over. Everybody sells them. They're easily attainable, relatively the same. They're meant for that long-term rental exposure. Okay? But when you fall into the short-term and mid-term rental category, that is publicly advertised online 365 days a year, whether your occupancy is 10% or 90%, that falls into a totally separate category of rental that's actually defined in the U.S. insurance market as a business. And so your standard rental insurance policies are going to have business activity exclusions because long-term rental doesn't fall into that category. And that is where you can run into some potential claim denials as a property owner for not having the right insurance package. Even though you told them you're renting, we maybe weren't very clear on, no, this is on Airbnb, this is on VRBO, I'm using XYZ property manager and it's advertised on their website, for them to obtain and get you the right insurance package.
Yeah, that is interesting. We simply told our owners that they should go to their brokers and tell them exactly what they were doing, that it was short term, they were using a property manager, provide them with all our details, and then if we were in any doubt when we saw, and we always wanted to see, not just their certificate of insurance, but the part that showed that they had sufficient coverage for the short-term rental business activity. And we wanted to see that. We filed that every year. Internally, we had all those documents filed, so we knew that our owners had sufficient coverage for that specific area of short-term rental. And of course, coming with that, when they got that coverage, they would have business interruption in there, so that if something catastrophic happened that stopped their business running, they would be able to make a claim for that loss of business. So that's what we were looking for as managers from our homeowners.
Yeah, and that brings another point of confusion with a lot of homeowners out there and agents alike: loss of rents versus loss of income. So when we're looking at short-term and mid-term markets, from an insurance standpoint, it's not rental income, it's business income now. Mm-hmm. And so when you look at these landlord insurance policies that a majority of the U.S. market is carrying, they only have what's called loss of rent coverage, which is a limited scope. It pays a fair market value for rentals in that zip code, which is not the same as your business income that you're generating on the property. For example, Heather, you and I could have townhouses in Vail, Colorado right next to each other. And you happen to stay at that townhouse a lot more, and so you're not generating as much income as I am, who's renting it out much more frequently. Now, if there was a fire to the building association and both of our townhomes are gone, I don't want to get paid the fair rental value, which is the average between you and I. I want to get paid what I'm out and what I'm insuring for. That's the other kind of line we need to make sure we're talking to agents about, is when they go, this is your rent, and you go, no, it's not rent, it's income. It's income. And I need to be insured for my income, not fair market value rental.
That's interesting. And again, we would look for business interruption, having that word business in there. So what else would you like to cover when you're talking about that homeowner pillar?
Yeah, so on the homeowner pillar, you obviously want to make sure that there's, first and foremost, it's either enhanced to or specifically designed for short-term rentals. And so short-term rentals is really going to mean 6 months or less. You're not doing the traditional leasing and you're the one furnishing the property. It's not the tenant's belongings that they're moving in. So you want to make sure that it's adequately enhanced for that. And then you also want to make sure that not only business income, but that you're getting your property coverage limits at replacement cost, not actual cash value, and that's for your personal belongings or business personal property is another term. Inside, that if there's roof damage, you're getting a new roof, it's not actual cash value. These are all things that you can enhance your policies for, and it does increase your premium in any insurance market or any provider to do that. But what we're doing is we're strengthening our risk management here we're transferring more risk onto the carrier that we're electing to do business with so that we're out of pocket less money if something happens, right? Now everybody's different. Some people have deep pockets and they're fine with the lesser coverage. That's great. But the general populace, let's increase our risk management a little bit, pay a little bit more money to better protect ourselves. From a liability standpoint, which we can discuss the different liability types and what they mean, but from a liability standpoint, no less than $1 million on the base insurance. Okay, so that's not your base insurance plus an umbrella. That is the base product standalone by itself at $1 million to begin with. That is the new norm. That is, and is with your experience on your claim, people sue for $1 million bucks. So you want to have $1 million in coverage in case something goes the wrong way and you're found liable, and now it's $1 million settlement. Those are the key starting components of what to look for in pillar number 2 on your home coverage.
Okay, you mentioned umbrella. Can you just explain what umbrella means?
So umbrellas are commonly sold in the personal lines realm. So you have personal, landlord, commercial, and personal and landlord size area, if you will, you get umbrellas. And the reason for that is those base insurance policies have low limits of insurance. And then you have car insurance and you have X and Y and Z that you need to put in or quote unquote bundle into your insurance package. And those also come with low liability limits. So you get an umbrella to kick you up to or above that $1 million limit. And those are very inexpensive. One common confusion with umbrellas is umbrellas follow whatever the base coverage says. Okay, so if my base policy has an exclusion for, say, dogs or animal bites not owned by me, the insured, and that base insurance excludes the claim for a dog bite at my property, your umbrella does not also respond because it follows the terms of that base insurance. Okay? Now, in the commercial side of things, it's generally referred to as excess. It's a little bit different, but for points of this conversation, it's relatively the same. If I carry a commercial style policy on my short-term rental, I cannot additionally protect it with a personal umbrella because they're different insurance forms and they don't work together, right? Same goes, I cannot put a commercial umbrella over the top of my personal automobile, okay? They're not the same thing. So it's always personal to personal and commercial to commercial. And for the most part, if you have the right liability coverage on the base and you have a policy that's custom tailored for short-term rental exposure, the true need for an umbrella or excess policy is more or less nil at that point. Go buy as much liability insurance as you can afford, but it doesn't mean that everybody out there needs to carry a $10 million umbrella while participating in this market.
Okay, we've been talking about liability and for the homeowners. What about if they're offering things like, the additional things like watercraft, bicycles, if they've got a hot tub, or a pool, of course. How does that all fit in?
Yeah, so back to, we're having this conversation with our insurance agent, and we're trying to make sure we're getting quotes that are adequate for our property, that we need to be upfront with this in these conversations. I am offering a kayak, or 2 or 3, because I'm waterfront or lakefront or beachfront, whatever it might be. I have a hot tub, I have a sauna, I have gym equipment, I'm pet friendly, I have bicycles, all of these things, right? You want to be very upfront with what you're doing. And the reason why is a lot of the personal realm insurances, the homeowners and the landlord policies, are not going to cover these types of amenities. So now you put yourself into, okay, I need to go get commercial style insurance because it's much more comprehensive and robust. But then we need to be very careful about what they may or may not be excluding. Are they going to cover these amenity types? And unfortunately, in a lot of cases, when we're reviewing other insurance policies through our consultation process with a new client, we see things like recreational activity exclusions. We see small watercraft exclusions. We see heavy limitations around what you're required to have for a swimming pool or a spa. And that can leave you heavily exposed if you don't fully understand what those limitations are or what needs to be in place. If you have a recreational activity exclusion and you're offering kayaks, you could very well be on the hook to pay for defense yourself on that if somebody has a claim. So when we talk risk management about amenities, I always lean on the safety side. Specific to our product, we underwrite very heavily, which can be a frustration point to some clients. I'll side with you all on that. But at the end of the day, it's providing defensibility. So there's a reason why these companies have these exclusions or may not allow these types of amenities. It's simply put, they don't want to spend the money for attorneys to defend you. So if you have those limitations, remove the unnecessary risk and you can't offer those amenities. Or do you find a company that is going to allow you to provide those amenities with some certain stipulations that increase the factor of defensibility to help prove you not negligent should an injury arise?
Yeah, that's really interesting, because I don't think the majority of owners, when they go into this business, they really think about that. They think, particularly in this world of unreasonable hospitality and offering absolutely everything, that they just add in what is to them the bells and whistles, the extra things that their neighbours don't have, without really thinking of the ramifications of doing that, and maybe not sharing that with their insurance agent.
Yeah, it was told to us by an attorney client of ours that everybody thinks, oh, I have an LLC and I have waivers of liability and I have this big robust rental contract and this will never happen to me. But they said it extremely well. They said at the end of the day, you can't waive negligence. You can have the biggest, most robust rental agreement in the world, but if a personal injury attorney can find a way to prove you negligent, none of that matters. It doesn't matter how many layers of protection that you have, and it's ultimately going to fall on the insurance policy should there be coverage or your own bank account, right? And so that's where things like very simple safety things come in. Like, you need to have functioning smoke detectors. You need to have carbon monoxide. If you're offering kayaks, you should have life jackets. If you have bicycles, you should have helmets. You are presenting a way that you are responsible, and should that person decide not to wear a helmet when they ride your offer bike and they get injured, you have a level of defensibility that you are not negligent towards their injury. And so again, you can't waive negligence. The other side of this is these might be familiar residential homes to you, the owner, or you, the manager, because you spend so much time at these properties. They're not to Joe and Jane Doe and their family who are coming on vacation for the first time to wherever they're traveling. They have no idea about the property, and it's your responsibility to make it safe and inviting, right? But also point out potential risks around the property. Just next time you stay at a hotel, just look around. And I know we're not trying to be the hotel. That's what's great about short-term rentals, is that every property is inherently unique of one another. But there's a reason hotels put up a slippery when wet sign. There's a reason they have exit signs. There's a reason why there's fire extinguishers on every floor. It's to defend themselves against potential negligence.
We used to tell because all our properties had docks, and those docks went out into the water, and suggested, and not all our owners would take us up on this, but we suggested stenciling to the end of the dock, no diving or jumping, putting it on a post, putting it in their guest guide, however deep the water was, because you never knew what was under the water.
Absolutely. It's one thing, like specific to our program, we require. It doesn't matter if you have a babbling brook that's only a couple of feet deep during runoff, or if you are lakefront and off your dock is 20 feet deep maybe, we require that you put in a swim at your own risk sign, and your property maintains rescue equipment like a nautical throw buoy or a river throw rope, because that is going to help, one, self-rescue if something happens, and hopefully prevent some serious injury like a drowning happening. But also, again, it provides a level of defensibility back to the carrier that is allowing you to offer these amenities. But should something happen, we have some ammo in the defense to hopefully limit or completely absolve you of any case.
Yeah, that is great. And, I hope that people with waterfront properties really listen to this. That just having that buoy on a tree by the dock and throw ropes is so necessary. However, I want to move over to property managers now. And this, that's where we were. I want you to explain errors and omissions, because people used to say to me, have you got E&O? And it's like, I think so, but I have no clue what this actually means.
Yeah, so your standard business type policies, property management is a little bit of a different animal. Property management for short-term rentals is a little bit of a different animal as well when you get into the complexities of it. At the end of the day, for one, shameless plug, we do have a company that does this in our network that's specific to property managers and can really help break this down for you. But you get general liability. All right, you may or may not have an office, or you may or may not go and do on-site visits. You should have general liability because if you're with a customer and there's an injury involved, you could be sued, and so you need that general liability. And there's a lot of other stuff in the package as well that you might want to get. But errors and omissions, otherwise known as professional liability, is to protect you against how you conduct and do business. Okay, so basically it's going to protect the manager specifically. If you're an individual property owner, you're hosting your own home, you do not need anything categorized in this pillar number one. You can ignore pillar number one. But what this is really going to do is it's going to protect the property manager against actual or alleged mistakes causing financial harm to your client. Okay? And so it's really important that as a property manager, you go ahead and get that as part of your package. It could be the way you promised some type of level of maintenance that didn't happen, that resulted in lawsuits to the property owner. You could get countersued from your property owner on that. And it could come in a wide variety of other ways as well. And I think most commonly what folks think of when they think E&O insurance is like a doctor or a surgeon or a legal practitioner has errors and omissions because the doctor left a medical implement in somebody's body. I think we've all seen that stuff before on the news or TV shows and stuff. And then they get sued, and that's errors and omissions insurance, but it does relate directly to management as well. And if you are alleged to have done something wrong within your practice of managing that property or advising your client that results in financial harm, you could be held liable, and you need to make sure you have coverage for it through professional liability E&O insurance.
It always strikes me when I see baby-friendly or child-friendly in listings and thinking, oh, they really are opening themselves up for trouble. Am I right?
Yeah, you are. It actually has become a pretty big point of contention through our underwriting with clients, and this question comes at a great time, Heather. I'm glad you asked it because I wrote it down to bring it up. But so baby equipment. Did you know, I'm going to ask you this question, it's anecdotal, but did you know that baby equipment is the number one recalled thing in the world?
I did, because I speak to Justin Ford. Yeah, but yeah,
yes, of course.
Just the recalls because of Justin, I subscribe to the recall websites. And when we were in business, we would look at the Canadian recall website really regularly to see if there was something. And I remember once, that's off the topic of baby equipment, but it was a particular type of dock steps that were being sold by Amazon. And I know that we knew that we had properties that had these dock steps. And I was able to go to these owners and say, there's a recall on these. But yes, so in answer to your question, I actually did.
Yeah. So it is, and it's nerve-wracking. And so the way we specifically look at it from an insurance firm, because again, there's some level of defensibility or level of indefensibility, if you will. If you are charging extra for the use of baby equipment at your property, you can get yourself in a whole heap of potential legal trouble because of that. Because one, you are not a licensed or insured baby equipment rental facility, and you are not keeping track of these recalls that come out literally on a daily basis for baby equipment. Okay, now with us specifically, we know that there are kid-friendly properties and that you're going to have potentially a high chair, a pack and play, and maybe some different types of baby equipment, especially if you're using the property yourself and you have little ones. As long as you're not charging for it, there is a particular level of potential defensibility of we're not charging for it, it's just they're the ones who opted to use it. The best advice, and this is my underwriting hat being a very lame risk manager, if you will, don't offer baby equipment. Most people are going to travel with their preferred baby equipment, or partner with a company like Baby Quip, who allows people to rent this stuff. They have their own insurance and liability coverage, that if a product is in service that was recalled, it falls on them, not on you. And the guests are the ones renting this from them and getting it delivered to your location. Okay? So that is the ultimate way to absolve potential liability around baby equipment. If you are going to offer baby equipment, do not, under any circumstance, charge additional rate for the use of baby equipment. Just don't do it.
That is tremendous advice. And when people are talking about upselling, you often see that baby equipment is included in those upselling ideas.
Yeah, you are not a bike rental shop. You are not a kayak rental shop. You are not a baby rental shop. You're not a gym equipment rental shop. I truly believe in maximizing revenue at your property as much as you possibly can, but you need to consider these certain things. Simply increase your nightly rate because you have multiple amenity offerings. Do not charge separately for it.
Yeah, great point. I want to talk about record keeping because when we went through our claim, we had pretty meticulous records. We kept maintenance records, and we encouraged our owners, and we were in a not the typical situation because we weren't in control of our properties because they were so widely dispersed. So we would recommend that if our owners had a hot tub, that they would have a maintenance log. So that maintenance log said what chemicals were introduced to that hot tub on what particular date, when was the water changed, and all this information that was checked and signed. So we had the record of when these things were done. And it's a bit like you've got your fire extinguisher and you keep a record of when it was last replaced. That's usually written onto the side of the fire extinguisher. People forget, they put their fire extinguisher in and that's it. It's there for the next 20 years.
Yeah.
So how important is that type of maintenance log and record keeping?
It's important, but not as important as a lot of people make it out to seem. So you don't need to go through and take individual pictures of every last piece of silverware in your property and every single plate and wine glass. Like, that's overkill. A general count of perhaps how many place settings you have is always good, especially if you have substantial damage. Worst case scenario, say total fire loss of your property. Like, my claims team would like to know how many place settings and what type they are. Do you have the IKEA plates, or do you have Fiesta ware? Do you have some higher end thing that we need to know about through the adjustment process? In terms of maintenance records, that is where I would advise that you keep a well recorded list of what you are doing. Okay? That can be anything from the changing of batteries or replacement of smoke alarms and carbon monoxide detectors, your regular maintenance schedule on pool cleanings, on hot tub servicing, your general cleaning schedule as well. There's tons of apps and services out there that you can sign up for. I know a lot of us who are in the industry are probably familiar with the Breezeways and the Turnos of the world, and those help you document and record those types of things that are going on. When you replace the filters in your ventilation for your HVAC system, that's stuff that you should record. If you had your gutters cleaned, if you had windows replaced, all of that type of stuff. And then in those maintenance records, I would highly encourage everybody to potentially have an Excel spreadsheet of who the company was who did the service as well. Because if there is a substantial claim or potential loss of life due to improper cleaning of a hot tub. Unfortunately, hot tubs are known for hot tub folliculitis, which is a blood infection, which could result in, unfortunately, the death of somebody. The insurance company is going to want to know who cleaned that hot tub and who is in charge of the regular maintenance. And that should be done by a hot tub professional, not your regular cleaning person. You should have that done at least monthly if you're a property with a hot tub to help protect yourself if something comes up. So maintenance records, way more important than taking pictures of every single little thing inside your house to track. Although if you want to do that, do it. It'll help us out in the claims process in the long run. But it's not as necessary as the maintenance record keeping. Okay,
that's excellent. And I think people should pay attention to that, particularly the things like pool maintenance, hot tub maintenance on anything really that your guest is going to use or partake of.
Canoes and life jackets too. Life jackets have a life. They need to be replaced. Helmets have a life. I'm an avid backcountry snowmobiler, and snowmobile helmets have an expectancy of 5 years. After 5 years, you need to hang that helmet up and go buy a new one. And so those are things you need to be tracking as well, is when you've replaced those and put the new ones in.
Is there anything else we haven't covered so far on what property managers need to be aware of? Is there anything that you find that they miss in terms of how they cover themselves?
So there's a misconception out there that property manager insurance is going to cover you for everything at all the properties that you manage. Unfortunately, most manager insurance around the general liability side of the product does not extend liability to the properties under management. And that is why it is super, super important that you are collecting certificates of insurance from your homeowners showing you, your entity, as additional insured. Okay? And so I tell every property manager that we work with and every new property manager that wants to know about how we can help them through this, it's number one, make sure you require $1 million in liability to your homeowners, that you are named as additional insured, and do not put that property online until you have a copy of that certificate. Okay? Because your property manager insurance more than likely will not respond to generic accidents that might happen at the property, because a lot of that does fall on the responsibility of the property owner. Now, you will be named in a lawsuit. You had that happen. Everybody was named in the lawsuit. In some cases, depending on where you're at around the world and how the insurance rules work and how those contracts are written, you may or may not be covered on your manager contract. But if you take anything away from this conversation as a property manager, $1 million in liability, additional insured, file that certificate away before that property goes online.
Yeah, great advice, great advice. Let's talk about damage waivers, damage waiver products. What exactly are they, and who should be using them?
So damage waiver products are for everybody. We are moving away from a world of security deposits. My generation, specifically, I feel strongly in the sense that I'm not real fond of some entity that I don't really know holding $1,500 or $2,000 on my credit card and potentially pointing the finger at me for some minor things that I more than likely did not cause at the property. So damage waivers continue to become very popular. They're very super inexpensive to me, the traveler, depending on what you want to charge for them. Depending on what product you're using, they could cost as little as $30 or $40 to me as a non-refundable fee. And then I don't really have to worry about my kids wrecking something and then you coming after me, right? The best way to think about damage waivers is a deductible saver. So in Pillar 2, your home insurance, you always have a deductible. And most commonly with my clients, we see that deductible floating around $2,500. Okay? So first out of pocket is $2,500. So me as a property owner, if my linens are damaged, they broke a lamp, they broke a TV, they put charcoal in my gas grill and wrecked it, they caused some level of damage to my property in that sense, they've smoked in my house and put cigarette holes in my couch, whatever, that first $2,500 has to come from somewhere, and it's going to be my pocket as a property owner. So you can look at those damage waiver products as saving you out-of-pocket deductible, right? Now, some of these damage waiver products do come with liability extensions as well, and they use a commercial liability, and they cover up to $1 million, but because they're inherently inexpensive, there is a lot of exclusions, okay? And so it could be exclusions around dog bites, it could be the recreational activities like we talked about, it's maybe not covering communicable diseases through spa equipment, things like that. So you got to keep that in mind, right? Now, they work very well with your home product. So let's use proper insurance and our damage waiver company, Waivo, as an example here, okay? So you come to proper and you get a $2,500 deductible, and somebody happens to throw a party. And now that damage to your house, including lost business income, is, say, $50,000, okay? Now, proper, with our product specifically, we're going to respond to that, but it's going to be $50,000 less $2,500, okay? But if you have a damage waiver product, and that is damage caused by a guest, then you also can apply against a claim for that damage waiver product to be the first responder as well, right? And that's usually paid for entirely by the guest. You don't have to pay that yourself. And so they're great products that work well in that. And keep in mind, a damage waiver product does not cover anything outside of the rental period, and generally things not caused directly by a guest. Okay? So right now in the U.S., it's been very cold. We had negative 68 last week here in Bozeman, Montana, where I'm at. We're built for it. Texas got down into the single digits. A lot of the Midwest and the South got down into the single digits, and we have a lot of frozen water pipe claims going on right now. Damage waivers are not going to respond to that. Okay? So you got to keep that in mind too. They're only for during the booking period and really only for damage caused by a guest. But they work extremely well because we've all dealt with the damaged linens, we've all dealt with the broken TV, the broken lamp, the cracked chair, that type of stuff. And that's really what they're meant for. And very similar to like air cover. That's what air cover is meant for. It's not to cover, I had this big event and a tree fell on my house and now I'm shut down for 8 months. That is not what a damage waiver product is going to do.
Yes, I know for the years that we had a damage waiver and we stopped taking, we used to collect the checks. This is going back 15, 20 years ago. We used to collect this deposit checks and then send them back after the rental, and then it went to, we'll collect your credit card number, and there's some real issues around holding credit card numbers as well that most companies I don't think understand. But yes, moving on to damage waiver was just a huge lifting of stresses for us.
From a property management standpoint, all of these damage waiver companies can integrate directly into your website, and it's very much ease of use. You also eliminate potential risk from cybersecurity stuff by holding those credit cards or potential financial fraud, which is great. You also eliminate a huge risk that's actually coming down the pipeline in the United States. We're starting to see it in states like Washington. Airbnb is familiar. You can look up the lawsuit with the insurance commissioner there around air cover with marketing as an insurance product that's not an insurance product and paying taxes. It's going to make ripples across the U.S., but a lot of property managers are self-funding damage waivers now. They are simply throwing a fee up of, call it $50 and pocketing the fee, and it's not a regulated insurance product yet. I would strongly encourage, if you're doing that, to get away. Partner with a damage waiver company. There's a handful of them out there, and find a partner that you like and trust. Forego making $50 a booking, and now it's $30 a booking, but when the legalities start coming down the pipeline, you are not dealing with that potential insurance fraud conversation. I know that's a scary term, but that's what it can end up being. So it's time to move to damage waivers as a property manager. As an individual host, you can also move to damage waivers. A lot of these damage waiver companies are going to allow you to sign up to them as a single property owner. You don't have to be an enterprise client with multiple properties. And forego that security deposit stuff, forego the bad review, forego the guest communication for these smaller damages, and really streamline your business around that.
Yeah, I like that. I like the idea. We did that. We did it all ourselves for many years. And yes, it built up quite a nice little pot of money. But once I started seeing these, this was before there were damage waiver products out there on the market. And yes, I think going back, I would probably look at those instead of managing yourself, because there's some inherent issues in there that I don't think we ever considered. Hey Nick, we are getting really close to our time, and we haven't even touched on travel insurance yet. So maybe, there's just so much here and so interesting, and I hope everybody has stayed to this point.
Yeah, travel insurance in 30 seconds. So travel insurance, we all have cancellation periods, right? And most of the OTAs they're already partnered with a travel insurance provider. But if you're doing direct bookings, there's so many out there. There's Generali Global Assistance, there's Fay Travel, you have AIG Travel, Red Sky Travel is a great product as well. There's so many out there that you can implement into your own website. And it's not something that you can force your guests to pay for, but if you have a 30-day cancellation rule in your contract, and I'm 15 days from travel, and my spouse has just come down terribly ill with something, and I can't make my trip from Montana down to the Keys in Florida, I should buy travel insurance. because that is going to help refund me what I paid to you for my stay. Let's say it was a $3,000 booking. It's going to pay for, and a lot of times, additional experiences that I may have paid for that have cancellation periods, and it's going to prevent you from wanting to or having to send back that money to me and try and fill a booking very quickly. Additionally, because it does that, we get phone calls at Proper all the time where it's this person canceled because it's smoky in California from forest fires. How do I claim loss of revenue? There was no claimable event. There was no damage to your property that resulted in loss of revenue. So there is no payout from tier 2, pillar 2 on the home insurance. So that's why it's important to look at implementing a travel insurance strategy into your risk management around your property.
Yeah, that was great. Thank you for that, to do that so quickly. I know from being a property manager, one of the most difficult things you have to deal with is when somebody calls 4 days before their vacation to say that there's somebody's fallen ill in their group, they can't come, please can we have our money back? And if you have a product that you sell at the point of booking and make it very clear what will happen if you don't buy that product, then it doesn't make the conversation any easier if they didn't, but at least you've got it to and say, look, we did show you this product and you chose not to take advantage of it.
Yeah, so it's important to have in there. You never know what's going to happen, and it can ease the conversation a little bit because it does put the onus on the guest for that, and they're inexpensive. They could be $40, $50, $60 per booking for the guest to purchase, and it's just a good thing to have in your strategy.
Nick, thank you so much for your time with me today. All the information on Proper Insurance is going to be on the show notes. Proper is sponsoring the STIR Crazy Month, and you will see a lot more about Proper on our virtual vendor showcase as well. So anything else you'd like to add before we part company, Nick?
Yeah, so I would add that when we're operating in the short-term rental space, regardless if you're a manager or an individual homeowner, you need to take a stronger focus on your risk management. And you need to partner with a company that is not just get a quote, pay a premium, and move on with no additional interaction. You want to research and work with companies who are intimately familiar with what you're doing and are more in here as a partnership from a risk management standpoint, not just selling you an insurance product with a premium. And that's something that we pride ourselves on. We're going to guide you through not just setting up insurance, but also ways to better protect yourself from a high-level safety view at your property. When and where to put in handrails, your smoke detectors, rental agreements, waivers, things like that, to be your partner in risk management on this business. So regardless of who you move forward with or who you use currently, have deeper conversations and be unapologetically open with your insurance agent and or carrier about what you're doing at your property to make sure you are in fact protected.
That's perfect. Thank you so much, Nick. I'm sure we'll be talking again at some point in the future because I'm sure I will have many more questions, but for the moment, thank you so much.
Absolutely. Thanks for having me.